So when DraftKings dropped its latest quarterly results, the market kind of freaked out. But here's the weird part. Their CEO sounded more confident than ever. So what's the real story behind those numbers? Let's dive in and decode what's actually going on.
Okay, check this out. This is the quote that got everyone talking, straight from CEO Jason Robins on their earnings call. I mean, he sounds incredibly optimistic, right? Like the company is just absolutely crushing it. But, well, that's not quite the story the headline numbers were telling.
Yeah, because right after that super bullish statement, the company announced they were cutting their forecast for the entire year. They dropped their revenue guidance by about $300 million and basically slashed their profit outlook, their Adjusted EBITDA, by nearly half. You can see why this disconnects and investors scrambling for some answers.
And this brings us right to the heart of it, the central paradox of this whole report. How can a CEO be more bullish than he's ever been, while, in the same breath, telling the market to expect hundreds of millions of dollars less in revenue and profit? On the surface, it seems like a massive contradiction.
This is the question we're here to answer. We're going to unpack the story that's kind of buried in the data, move past this scary headlines, and see what the company is actually seeing.
All right, first things first. Let's tackle that bad news head on. Why the big miss? Well, the answer isn't some deep flaw in the business model. It's actually much simpler. The bettors just had a really good run.
This single number, it explains pretty much everything. According to DraftKings, customer-friendly sports outcomes, which is just industry jargon for the players won a lot, cost them over $300 million in revenue in just 2 months. A handful of wild, unpredictable NFL game results had this huge effect.
Now, to really get this, you need to know about something called the Sportsbook's hold percentage. It's basically the cut the house takes from all the money being bet. When the popular teams win or all the favorites cover the spread, well, a lot more people win their bets, and that hold for the Sportsbook can drop like a rock, at least for a little while.
So the crucial point here is that this is a game of volatility. These swings are totally normal. In fact, just last quarter, the complete opposite happened. The house had a great run, and those outcomes boosted DraftKings revenue by about $100 million. It's just a reminder that quarterly results can be super noisy, because they're driven by the one thing no one can predict, sports itself.
But if you can look past that short-term noise of who won the games, you find the real story, the metrics that explain why the CEO is so optimistic. This is about the health of the actual business engine humming along underneath.
This gets right to the core of their strength. People are betting more. The handle, which is just the total amount of money wagered, is picking up speed. It's up 13% for the NFL season so far, and an amazing 19% for the NBA season. Bottom line, more people are playing, and they're playing more often.
And it's not just how much they're betting, it's how they're betting it. Parlays, which are way more profitable for DraftKings, are surging. They're doing a better job of keeping customers coming back. And on top of all that, their iGaming online casino business is accelerating, with revenue growing 25% year over year. These are the powerful fundamentals that don't get shaken by a few unlucky football games.
So, with that strong of a foundation, DraftKings isn't playing defense. No way. They are playing offense, making strategic moves to lock in growth for the future.
A huge part of that is deepening their competitive advantage through some major partnerships. They've signed exclusive new marketing deals with giants like ESPN and NBC Universal. This gives them just incredible reach and gets their brand name everywhere, especially for the NBA, where they now have access to 73% of the national broadcasts. That's a big deal.
But they're not just strengthening their main business. They're also expanding their world by jumping into a completely new, though related, category.
And that new category is called Predictions. This is their plan to launch a whole new product that lets people make predictions on sports. They see this as a huge opportunity to go out and acquire a whole new wave of customers. And they've got a really clear 3-part strategy for it. First, they plan to compete and win right away, using their massive customer database as leverage. Second, they're being really smart about the rollout, focusing first on states where sports betting isn't even legal yet, which unlocks a brand new customer base. And third, they're being disciplined with their cash, aiming to make this new venture profitable, fast.
So when you put it all together, what does the big picture really look like? Well, it's a classic story, really. It's short-term volatility versus long-term strategy. It all boils down to 2 different timelines. On one side, you have all the short-term noise. Those unpredictable game results, quarterly numbers that can swing all over the place, and scary headlines. But on the other side, you have these really powerful long-term growth drivers, more customer engagement, new products like predictions, and those big strategic partnerships. The company is basically telling investors to focus on the right side of this chart.
And they are definitely putting their money where their mouth is. The board just doubled their share buyback program to $2 billion. That was a massive signal of confidence from inside the company. They're saying they believe their stock is undervalued and they are willing to bet big on their own long-term plan. And this final quote from the CEO just perfectly captures the entire idea here. The core message is that luck, whether it's good or bad, it all evens out over time. What doesn't even out is the fundamental strength of the business. And that, he argues, has never been better.
So, DraftKings is making a big bet of its own. A bet that its powerful growth engine and its strategic vision can easily outrun the temporary chaos of bad luck. And the question for investors, and really for all of us watching, is this: is that a safe bet?